So I have to say, I hate giving talks at this point in the day because I find that each talk, each speaker, I have these different ideas that come up in my head and I want to engage in the conversation, and I get further and further away from what it is I'm supposed to actually have talked about. So it's a very challenging kind of thing for me to do. And I appreciate your patience, because I will try to focus in on what I'm supposed to talk about and get us to the panel as soon as possible, because I think that's really where we're going to be able to dig into a lot of this. Jeg vil også sige, at jeg vil gerne, at du forstår, hvad jeg siger, så jeg skal ikke tale dansk, men jeg skal sige, at Mia og jeg har haft en god rejse her i Danmark, og vi håber at komme tilbage snart. Okay? Tak. So Fleming, in inviting us to come and participate in this discussion today, presented a broad, fundamental question in his initial invitation to us. And it's a very big question. And so I have to make it a little simpler. And so when I was thinking about the agenda and thinking about each of the topics that we would explore today, this is how I kind of put it all together in my own mind. But I also am a very simple person, and so I really had to come to something that was even more simple as an understanding of what this discussion was about. And when I think about philanthropy, there are many things I love about philanthropy, but ultimately I feel like many of us are just a pack of wolves howling at the moon and asking, are we having an impact? And I think this is fundamentally the issue that we have to really explore. And so in order to begin to unpack this question, I'd like to start at a very big level with a conversation around the nature of value and how we understand the fundamental construct of value that we're trying to create through not only the course of our work and our investments, but in fact, through the life that we live as individuals. I'd then like to come down one more level and talk about philanthropy and foundations as impact investors and as multilingual leaders advancing change in the world. And we'll explore what that means. And then finally, I'll take the last part of the session and explore this conversation around research foundations as both collaborators and catalysts for change in the world. So it's very appropriate that we're here. This is a place where Albert Einstein came and walked these same grounds. And I think that we spend a lot of our time thinking about success. How many patents did we get? How many grants did we make? How big is our asset base in order to make more grants and do more good in the world? And I think it's very easy to lose track of the fact that ultimately the purpose of pursuing success should be creating greater value, and that the number of grants, the size of our portfolio, our reputation professionally is really not the point. The point is, how do we use those things to create value in the world? Now, when you talk about value, it can be very challenging. It's a very big topic. And so I'm reminded one time when Albert Einstein was talking about the theory of relativity, one of the people in the audience said, this is just, it's too complicated. I just can't get my head around this. I don't know that they said it quite that way at the time, but that was what they meant. And his response was, it's really quite simple, but that doesn't mean it's easy. And I think when we reflect on the work that we're involved in, I think it's really very simple. And that doesn't mean it's very easy. And so to Volker's comment earlier, I don't believe in traditional advisors and consultants who come in with their four-square chart and they walk you through a process and you get to an answer. I think that the quest to optimize value is a journey. And it's a journey for organizations, and it's a journey for the individuals who lead organizations. And as soon as we become comfortable with that, the process is really both enjoyable and also, I think, ultimately more fulfilling. Now, again, I find it, when you talk about complex issues, it's so easy to go deep into the weeds very fast. And so to see things in a better perspective, I like to kind of step back. And I think this is about as far back as we could step. And when we look at the world, and we think about the nature of the world, how it is made up, how it is constructed, It's whole, it's integrated. It's a set of interlocking systems that are environmentally based, that have social connotations. You can see the different countries, but you don't necessarily see the political boundaries. But you know people are there, and you know that there are economics that we have created that structure how we interact, and there's social constructs. So all of these things are here, but it's really quite simple to see. And I guess my challenge is that this is the world that I believe in, but the world that we're presented with is a bifurcated world. And when we begin our career, we basically are asked to accept the idea that the only purpose of business and investing is to make money, and that the only tools that we have to address social challenges and issues is the nonprofit sector and government and social issues. And we've created this structure where as long as you live on either side of that bifurcation, you can be very successful. You can have a long career in philanthropy, in the nonprofit sector, in government, and we know how to manage the laws and the regulations. We know how to educate people in that career track. We understand the metrics that have to do with the social sector and government. And opposite that is a whole nother parallel system for business and economics, which is very clear. We all understand, how you get a degree in managing businesses. We understand capital. We understand the metrics that are at play. And if you stay on either side of the divide, you can be very successful and still not create true value. And I think that what has happened in the last, I'd say, 20 to 30 years, and I would argue that some of the vision that people had in establishing many of the corporate foundations in Denmark, is that people have increasingly, on both sides of this divide, come to realize the limitations of operating with a bifurcated value framework. And you see more and more business people who are approaching a more of a blended value approach to understanding the role, purpose, and function of business. And you see more and more nonprofit people who recognize that they need to be using economic tools and thinking. They need to have the opportunity to take business skills and acumen and apply those towards social and environmental and community ends. And it's really this kind of coming together that we're seeing, and that I view as part of a blended value proposition. And so this proposition basically is grounded in the idea that value is fundamentally whole and non-divisible and integrated, that the fundamental components of value are social, environmental, and economic, that business has a morally legitimate role to play in addressing social and environmental issues, and nonprofit organizations have an obligation to use all of their economic resources and tools and capacity to advance their mission and purpose in the world. Investors pursuing economic return have the opportunity and, in fact, the responsibility to take into account social and environmental factors as part of their investment strategy. And that, in fact, there's a flow of capital that goes from philanthropic to near market to market rate that can be drawn upon as asset owners in order to be successful and to optimize our value creation potential. And so with that kind of basic frame in mind, we come to the philanthropic arena and the notion of foundations as impact investors and as multilingual leaders. Now, in the traditional American approach to philanthropy, you basically have this framework where you take a pot of money that you've made in the for-profit space, you put it into a nonprofit vehicle of the foundation, you manage 95% of that capital for more financial return, and you give away 5% on an annual basis. Now, I've spent most of my career within philanthropy either receiving grants, running foundations, or advising donors and foundations. I hate this model of philanthropy. The reason I hate it is that what business would you invest in where they said that for every dollar that you invest, 95 cents will be put away on a shelf and less than 5 cents will be used to execute the business strategy that you're investing in? And this is the business model of philanthropy in America, where the idea is that If you're lucky, 95% of your assets are neutral to advancing your business strategy, and less than 5% of your assets are actually driving your mission. Many foundations actually invest in things that are antithetical to their mission. In a paper that I wrote early in the 2000s, I tell the story of the Nathan Cummings Foundation in New York City, where the CFO was charged with reporting to the board on both their for-profit and their philanthropic investments. And she was very pleased with an $800,000 investment they had made in Smithfield Foods, which is a large pork processing group that had done very well. And as she was reviewing her presentation materials, she realized that the program officers had made an $875,000 grant to a group of community organizations who were engaging in community organizing efforts against Smithfield Foods. We do this all the time, and it's not only is it just antithetical to like good investing and business practice, but it's actually undermining the ultimate purpose and value potential that foundations can create in the world. And so I would argue that foundations really have a host of assets that we can be leveraging in support of value creation. There's a set of financial assets that, again, range from debt to equity and grant making. And there are also, of course, non-financial assets that are time, talent, the political network that can be put to work in advancing the institutional purpose and mission of the foundation. We often think of philanthropy as simply grants. But in fact, there are a variety of ways that we can structure philanthropic capital. There's a variety of ways that we can leverage our assets through proxy voting and corporate engagement, through direct investing and small business development and more innovative approaches to addressing social issues. There's a host of strategies that we can execute. And in fact, even if we just think about how we do our grant making, there's a number of ways that we can be more innovative relative to how we structure that capital to achieve change. Now, of course, in the context of Denmark, there's also the idea of foundations as market actors, where you have foundation organizations that actually have controlling interests in for-profit companies, and that those companies are actually out in the market creating economic value, but also employing people, having an impact on community, paying taxes, and there's an opportunity, I think, to really bring these parts together and understand the corporate practices and stakeholder engagement, the investment strategies of the foundation, and the promotion of a vision for value in the world that is more than what we're presented with today. Now, from the asset owning perspective, I think of this as a unified investment portfolio, where instead of thinking about we're managing our assets for financial return here and our grant making over here in order to do good, it's really a total portfolio. Most of my time these days is spent actually working with 5 families, one in Hong Kong, one in Colorado, one in Australia, one in Boston, one in San Francisco. What they all have in common is that they are ultra-high net worth individuals who have made the decision to manage their total net worth on an impact and sustainability basis. And so when we consider strategy, we're not thinking about how do we do grant making to make up for all the bad things that we're creating in our investing practice. We're thinking about how do you manage the corpus of the family as a whole, and through whatever vehicles are best to advance the interest and the vision of what the family wants to do. So we have foundations, we have operating companies, we have investment groups, we have funds. We're basically using all of the capital to capture the total blended value that the family would like to create through its asset management approach. And it's a recognition that even that the social value element has embedded within it economic value aspects, and that it's a question of managing social and financial capital concurrently in order to optimize the total value that the family has the opportunity to create. And so as we shift those ideas down to the context of research foundations, you'll see in this section, I actually have no suggestions or advice for you on anything. I have a set of questions. So this is the first in that series of questions I want to tee up for you, because I think fundamentally, as research foundations, there are questions around how do you manage external relations with stakeholders? How do you really engage in that level of connection with the folks that you're investing in? And then a response that needs to be made in terms of how does blended value become optimized through these partnerships as executed by research foundations. Now, a long time ago, I did a piece of research on, that helped me kind of create and sharpen my thinking around blended value. What I realized was that I was having conversations with investors, with philanthropists, with entrepreneurs, with social entrepreneurs, and I felt like I was having the same conversation with each of these different people and these types of people. And what was interesting is they all were coming to what I thought was the same question from what they thought were very unique perspectives. But to my mind, they were all fundamentally asking this question of how do we overcome the bifurcated value proposition? How do I, as a corporate executive, provide return on a financial basis to my shareholders while also engaging the stakeholder community in a better, kind of broader value proposition for the company? And what we found was that there was a whole set of cross-cutting issues that each of these actors really were grappling with at the end of the day, because they were all bumping up against the limitations of a bifurcated frame. And so they were talking about fundamentally issues of how do you rethink the structure and purpose of capital? How do we create a new set of metrics to capture performance on a term that's more integrated as opposed to bifurcated? What does it mean in terms of organizational capacity and structure? How do you lead an organization toward more of a blended value kind of goal as opposed to a shareholder return or stakeholder engagement perspective? And I think that what it led me to think is that the perspective that many people have of research foundations is this: that basically it's a question of dangling the grants, right? And we heard earlier about the number of people who apply for funding and the small number who actually get it and the political dynamics and everything else. I think this is a traditional way to think about philanthropy. I'm not saying that anybody in this room would actually fall into this category or practice, but I think there's an opportunity to think in a different way about how you engage in philanthropy and advance a research agenda that really creates and optimizes greater aspects of value creation. And when I think about research foundations, I think about them as a type of impact investing. Together with some colleagues at Duke University, we spent 3 years interviewing the best, quote unquote, impact investing funds in the world. We started with a universe of about 300 funds managing literally billions of dollars in capital, and we basically narrowed down through a series of interviews with the GPs and the LPs to really find out who were the best. And what we found is that successful impact investing really has a number of components. Whoops, sorry. The first being it's a multi-sector exercise. The idea that there's the investment here and the impact there is really wrong. It's a stakeholder-driven exercise. Often the investors are really the last ones to understand the value proposition that the people they're putting money into see, right? That it's really a question of letting the market lead you to opportunity, that it's a question of being open to creating the right vehicle for the right job, not being limited to thinking about this is how we structure a grant and this is how we make an investment, but rather how do we take our capital and structure it in the best way possible in order for us to achieve the mutually shared goal that we have with our stakeholders. It's a question of integrating cultural change, what we just heard about, into the process of investing. And finally, it's a perspective that says that this diversity of actors and stakeholders can each become better in executing their particular part of the strategy by working collaboratively across silos and across sectors. And so if we think about the opportunity for research foundations to improve their practice, it's really an opportunity to move from a focus on grants to a focus on an understanding of the resources and capital and total portfolio that could be applied in the execution of the ultimate vision of what the foundation is really trying to do. And most foundations are not trying to be good grant makers. They're trying to achieve a vision or a mission or a goal or something well beyond the practice of philanthropy itself. And we tend to get so locked into our grant-making process. We have our board meetings set, we have deadlines for making grants, we have a certain way we do business, and we measure ourselves based on the transaction as opposed to based upon the return that's generated from the allocation of capital. And so we need to think about how do we reposition our thinking away from specific research topics toward a broader kind of theme orientation, toward domains, toward an ecosystem, a broader perspective that can allow us to connect the dots between a variety of investment opportunities and areas of interest and concern with regard to the research we're trying to support. And finally, it really involves, I think, envisioning foundations in a broader way, so that we're not thinking about simply our foundation, but we're thinking about the capital that we're deploying together with other actors in this market and how we could collaborate and work across institutions in order to create better, more effective investments for the whole. In order to do this, it means that we have to have a different understanding and approach to our definition of what it means to be an effective leader in philanthropy. And multilingual leadership is a term that my colleagues and I came up with on the basis of this research, where we found that the most effective leaders engaged in impact investing were individuals who, over the course of their career, had developed the capacity to speak across silos. Now, in some ways, this is similar to a multidisciplinary approach. But the difference is that often in a multidisciplinary approach, an individual still has their primary allegiance to the discipline that they represent in those conversations. And what we found in multilingual leadership is that the individuals leading the most successful funds were individuals who had almost transcended the sector. They had risen up above their particular area of interest, but were able to talk and engage with individuals across multiple areas of discipline and be conversant in a deep way with each of those folks. So as we think about the research foundation as multilingual leaders, we're looking for this notion of leaders who are able to express complex concepts and practices across these silos. And it's really a challenge for the research community, for the leadership of the research community, to be able to explore how do you evolve a common narrative to describe what it is that we're trying to do and the multiple parts that will contribute to each of our individual success. It's interesting, earlier today I was speaking to Professor Peterson, who's here at the University of Copenhagen, and there's an entire research group there that is simply looking at this question of cross-silo engagement and discussion and communication. I mean, and it's striking to me because I've never met him before, right? And this goes back to the thing of it's really quite simple, right? Because these are fundamental, very basic concepts that we forget as we go about creating strategy, as we go about building our careers and our practices. And at the end of the day, it just resonates because it makes sense. And so we need to think about this idea of multilingual leadership and how it executes at an individual level, at a team level, and at a firm level. Now, we don't have time today to go through all these characteristics, but you can see some of the types of skills and characteristics that we found in our research was really critical to the effective leadership of organizations that were kind of transcending the silo. And as we think about bringing this into practice, we need to recognize, again, that there are multiple types of expertise and there's multiple types of relationships. It goes back to the conversation we were having before about the informal and formal organizational structure. There is expertise that needs to be respected and engaged, and ultimately there's a deeper level of relationship, of knowledge creation, of strategy that comes out of a perspective that says that it's not about your discipline, it's about how that discipline can complement other practices and create something wholly new that can be of benefit to multiple stakeholders. So I think that as we challenge ourselves to kind of reflect on what does it mean to be a multilingual leader in the context of a research foundation, it's really a question of reflecting on what are the different stakeholder groups that we're engaging with and how do we rethink our relationship in conversation and practice with those organizations. And so we think about what are the relative contributions of the different stakeholders that we're engaged in? how can we affirm and advance their contribution as a part of our strategy for success? Again, it goes back to the themes that were raised this morning. And most importantly, what are the gaps in this value creation process? And how can we take the really precious capital of philanthropy, which is virtually unaccountable, totally flexible, you can do whatever the hell you want with it. How do you use that kind of capital to make things happen that the traditional systems are not allowing to come forward? How do you mobilize the total assets of the Research Foundation in support of the broader mission? Not the grant making, but the broader mission of what we're trying to achieve. And so the point is to become really focused on the long-term goals, to promote a vision of the sum of and not the parts, and to maintain this total portfolio perspective about the assets and the strategies that we're executing. Now, a lot of these ideas obviously are coming forward in a variety of ways. And we originally introduced blended value as a concept in 2000. In 2006, the shared value work was introduced by Michael Porter and Mark Kramer, which focuses more on the specific corporate practice as opposed to the broader kind of capital and organizational frame. We also have seen sustainable value introduced by Stuart Hart that looks at sustainability as a part of the value creation process, and integrated value by Diana Propere. We see things like the B Corps, which basically is a legal movement to shift the articles of incorporations of companies, both in Europe and in the United States and South America, to allow for the managers of companies to take into account stakeholder interest in addition to shareholder interest, so that there's a legal mandate that they, in fact, are supposed to run their companies with that orientation, as opposed to solely a commitment to generating financial return for shareholders. And finally, I was curious to see in September of last year, KPMG introduced what they're calling true value, which basically is a roll-up of everything else that people have introduced. I think this is great because it shows that these ideas are resonating and they're being brought forward to a variety of audiences that in the past it's really been kind of a pocket here and a pocket there and a pocket there. But the fact that KPMG and Michael Porter and these other folks are advancing these ideas, I think is a validation of many of these concepts and practices and can only help refine them. So let me just end with a quick kind of case study of one of the families that I'm working with that I think kind of represents this idea of connection between blended value, total portfolio, and having an evidence-based approach to managing strategy development and execution. This is a family in Colorado that sold an oil company and had a major liquidity event. They already had endowed a foundation, and they decided what they wanted to do was try to use the assets of both to improve the prospects for low-income children in the state of Colorado. And so they basically have created a 20-year investment time horizon during which they want to become fully invested within the state. And so if we're going to do that, the only way that that can happen is if we're successful in creating a set of platforms, a set of vehicles within the state to both absorb that capital and deploy it into philanthropic programs for kids, into job creation efforts for parents, into community economic development, and most importantly, into systems-level change that's informed by research around what will make for the best prospects for low-income children. So the organizational structure is basically two delivery vehicles, a foundation and a for-profit investing group, but is viewed, and they have interlocking boards of directors, but it's viewed as a single holding company. So we don't talk about the foundation or the investment group, we talk about Gary Community Investments. And it's an expanded toolkit that's based in the research that we have today, where we know that interventions that take place for neonatal through 5 years old will have phenomenal social and economic return over the lifetime of individuals. That if you don't make investments in very young children, you will pay for it over time on a social basis. And so that fundamental research insight basically drives the program initiatives of the foundation, which are then wrapped with a set of market and near market rate investments that are being made in supporting areas of employment, housing, community development, and health. So I think that, again, these ideas are all played out at a community level, at a family level, at an investor level, and yet they're all part of this broad vision. And I think that the trick is we get locked into these tracks of success. We get locked into how things are done versus what it is we need to do, and that inhibits our ability to really capture our full potential to optimize the blended value of our organizations, of our capital, of our very selves. Now, when the Marshall Plan, now we look back at and we say, of course, this makes perfect sense that we would have the Marshall Plan to help rebuild after World War II. But at the time, this was a very tough sell in the United States. And so when he was advancing this idea, George Marshall was testifying to the US Congress, and one of the senators said, why should we do this? We've lost, hundreds of lives, thousands of lives. We've spent precious dollars from the US Treasury. We should take care of ourselves. And in his response, in addition to all of the logic and the rationalization, Marshall looked at this senator and he said, it's time we steer our ship not by the boat to our side, but by the stars above. This is the opportunity of blended value. It's the opportunity of mobilizing all of our assets for impact and change. And this is the opportunity that I hope that you'll take and embrace and move forward in your own work. So thank you very much. I just forgot I have to keep this on.
You have to keep that on. And you mentioned the Marshall Plan. I was just wondering, have you been invited to Berlin to talk to Angela Merkel and the Germans about this concept of the greater value when they're dealing with the Greeks?
I'm waiting for the invitation. Actually, I'm hoping that the U.S. government will plug me into her phone line. So I can...
I've heard that they've got an organization that's very good at that.
Yes, indeed.
All right. All right. Any questions? I mean, I've got one. This makes a lot of sense. So much sense that some people could say it's common sense, Jed.
Dude, I'm telling you. But it's incredible how much money people will pay me to come and talk to them about this. No, I think that's the point, is that it is common sense. And as we grow, as we evolve, and we track ourselves and we organize our world, we get further and further away from the fundamentals that we all know. Mm-hmm. And I mean, when you're a little kid and your mom is sending you off to school, I mean, she didn't lean over and say, I want you to be the richest little venture capitalist in the classroom, right? No, she said, I want you to take care of your sister, don't spend your allowance, and walk the dog when you get home. Right? I mean, right there, the fundamentals of total value, like social engagement, economic responsibility, and care for the planet. Right? I mean, your mom knew this stuff. Okay?
Right.
But we forget what mom told us. Mm-hmm. So I'm just like your mom.
Well, yeah, we've got a question here. Get me out of this.
Yeah. Okay. Thank you very much, Jed. Being a researcher, I mean, couldn't one of the conclusions of what you say actually be these guys should not invest so much in research, but they should actually invest in something else? If I understand you correctly, then actually they can be so fixed on the research part that they forget that the research is only a means for something else. Or is that drawing you too far? I mean, I know this is not a thing I should say, because normally I have this standard thing when I talk saying, the answer is more research. Excuse me, what was the question?
Right. Well, again, I think that research is certainly a fundamental part of the future solutions. I mean, obviously, it would not to have research as a part of how you think about and execute strategy would be like taking half of your brain out and then trying to do anything, right? It just doesn't make sense. You have to have research. But again, I think, as was discussed earlier, it's really an understanding of the role of research as praxis. Of knowledge being informed by execution and strategy, which then gets refined and better. And it's not confusing the goal of good research with the idea that you're changing the world. Right? And it's not that you've made a good grant, it's that that grant leveraged something. It's not that you're a good foundation executive that knows how to run a good board meeting and get through the docket effectively. It's that those dollars are being leveraged to optimize impact and value creation. And so the funds that are being used for research is just one tranche of capital that should be deployed. I mean, I would hope that many research foundations are actually allocating venture and private equity capital into business development to take the ideas and put them to the market. Why wouldn't we do that? I would hope that many research foundations are not investing in publicly traded companies that are contributing to the social and environmental problems that their research is trying to address. I would hope that people are looking for opportunities to optimize the alignment of capital with the intent and the impact that we're seeking. Now, you'll note I have no answers for you about anything, right? Because I'm very clear with my families, with foundations I work with, whomever. It's not my place to tell you how to execute on this. It's my place to raise the question and to help work with people to find solutions and answers that optimize their vision of value that they're trying to create as asset owners, and that can enable them to mobilize the greatest percentage of their assets possible in support of the vision and the mission and the goal that they're trying to execute toward. And so the families that I work with are all executing different strategies and ideas and practices, probably none of which are exactly what I would do if it was my money. Right? But that's okay. Right? Because the trick is they're basically able to look at themselves and look at me and their other advisors and say, look at how we're optimizing the allocation of capital in pursuit of the value we seek to create. We're not taking 5% of our assets and saying we care about the future of our kids' communities and investing 95% in things that are destroying the planet. We're basically looking at the variety of ways that we can use not only our capital, but our values, our beliefs, the legacy of our family practices that can then carry on and carry forward as a counterbalance to all of the negative things that are going on in the world. And that's where the families really, you watch the conversations between first and third generation family members in this type of discussion, and it's fascinating because many times it's the first generation who has created the wealth, but in the process of doing that, they've become separated from the second and third generation family members. And by raising these fundamental questions of the purpose of capital, like, what is the purpose of capital? They're able to re-engage. And when you talk to a millennial, somebody in their 20s, the idea of spending your life trying to make money so you can then do good makes no sense. And when you're 80 or 90 and you look back on your life, the notion that your value is a check that you leave for your children is repulsive. So here's an opportunity to reconnect with the fundamentals of value creation and purpose and intent. And it's an opportunity that I think, regardless of where any of us are in terms of our own capital and net worth, it's an opportunity we each have to basically re-engage with family members about what really has meaning and value for our lives.
Jed, what do you tell people who are investing, let's look at millennials who are investing in their retirement. This is away from foundations for a second, but it's the same thinking. They're investing in stock portfolios. And let's say they are against mass retail practices, i.e. Walmart. And yet, in all of these portfolios that they're invested in, Walmart shares are in these. And so they invest in that. And yet, they are fundamentally against that. I mean, almost everyone's doing that.
Right.
What's your answer to that?
So there's a conversation that we're having around the democratization of impact investing. And what this speaks to is the idea that we need to create more investment vehicles, strategies, and products that can be available to people at whatever asset level. If you have, $5 million to $500 million, you can pay advisors to screen funds. You can pay advisors to create strategies that emphasize this piece or not that piece. If you have, in my case, less than $5 million, you don't have that option to tailor. Right. And so a lot of the work that's going on today is around creating new vehicles, new strategies, new products, investment products. Now, the thing that's great is that, so this conversation has kind of been going on off on the side, right? And it's been a conversation around how do you structure and mobilize capital for impact. That discussion is now coming straight together with a conversation in the mainstream investment community around how do you make financial return by consideration of off-balance sheet risk and liability, represented by major storm events, pandemics, a workforce that is not well educated for the future challenges that the business community needs. And these are two parts of the same discussion. And so we're seeing more and more mainstream investors who are recognizing that if all they care about is making money, they cannot make money in the future the way they have in the past. That you cannot think about profitability by not taking into account off-balance sheet risk. And so many of these people are approaching this same conversation from simply a risk mitigation perspective. And this is what I'm arguing is the kind of the complementary inverse of that discussion. And so you see more and more investment houses, major financial firms creating product that now is integrating environmental, social, and governance factors into their investment approaches. And in fact, I'm not sure of the specific numbers, but about 10 years ago, it was 1 in 10 US dollars that were invested along the lines of a socially responsible approach. A report was published this last year that said now 1 in 6 US dollars is invested with reference to social and environmental factors and impact. That's a huge shift.
It's a shift, yeah.
I spent a number of years working with George Roberts of Kohlberg Kravis Roberts, and we had these big conversations in the late 90s and 2000 around these ideas. And he was great. I mean, he was very direct, and he said, look, I love what you've done with our philanthropic money, but what I have to do for KKR is optimize shareholder return. More recently, in the last year, me and I went down and had lunch with him, and the whole conversation was around sustainable private equity investing. And the fact that as a private equity investor, KKR, BlackRock, Carlyle, they're all recognizing that this is the place where you can kind of generate marginal value add for your investment dollar. And in KKR's case, their sustainability report talks about how they've brought $900 million to their balance sheet, to the bottom line of their balance sheet, by virtue of integrating greater consideration of sustainability and environmental eco-efficiency practices within the companies that they're invested in. So this is not fringe stuff with, recovering social workers. George is making money for his investors on the basis of many of these ideas. Now, is it exactly what I would do? No, but that's okay, right? It's all part of a shift in terms of our understanding of the purpose, nature, and best management of capital. And it's a great part of the evolution that I think we all have an opportunity to be a part of.
And my mom is going to be really happy to know that you said today that she was telling the truth all along.
You got to go home and call her.
Give Jed a hand.
Thank you.